Hey everyone, Jason Sherman here. In today's episode of Zero to CEO, I have with me Anthony Milewski. He's an investing veteran and chairman of Nickel 28. Welcome to the show, man.
Hey, thanks a lot for having me, Jason.
Cool. And today we're going to talk about how to wisely invest in your future, which I'm sure a lot of people want to learn about, right? Because especially with the downturn of the stock market during the pandemic and inflation and all sorts of craziness happening, I definitely want to talk a little bit about that. We'll get to that. Is probably everyone keeps saying it's the time to build generational wealth, right? What are your thoughts on the state of things today and how people can build that generational wealth that we keep hearing about in the news?
Yeah, so I think slow and steady wins the race. If you look at the last few years, one of the features of the market, at least among new investors, has been, chasing crypto. And look, that's fine if you remembered to sell and took gains on the way up. But I think a lot of people didn't do that. But I think the proven way, if you're just the average person, punching the clock 9 to 5, making a living, is dollar cost averaging into the S&P 500 index fund, low cost index fund, reinvest the dividends. You do that every month on the dot, the 1st, the 15th, whatever works for you, and you do that for 30 years. I mean, look, there are other ways. You're always going to meet the person who did this thing or that thing. They bought a coin. They did this. That's all fine and well. But if you want to talk about retiring, you want to talk about giving money to your kids, it is nearly impossible to beat that strategy. There are people who have done it, no question. But you want to talk about the average, I think that's really the way to go.
Roth IRAs and retirement accounts where you can put in, $250 a month or something small, but it's consistent. And then that compound interest over 30 years will allow you to retire. And I've been doing that for almost I think 2 decades now. So speaking of nickels and dimes and quarters, how did you get into battery metals for your Nickel 28 company? I'm curious, where did that come from? And I did notice Elon Musk's partner started a whole business around stripping down recycling material from batteries to do batteries for cars and other. He's trying to help the industry, right? So, is that what you're doing as well?
Well, I spent my career as a professional investor, and one of the things that I would say is I'm a thematic investor, and so that's kind of catching on to big ideas, big transitions, big moves in markets, and maybe it's been 7 years ago now, we started thinking about this global energy transition, which not only includes vehicles, but it also includes things like grid level storage for your house. An example could be a new development and all the houses are connected through solar with a single battery, and that battery, lead acid battery, will provide, power back to the grid and to the development. So there were a bunch of things going on, the copper needed for the development of the infrastructure inside of the US and Canada. So, I was thinking about what were ways to play that. And what struck me was nickel and cobalt, because remember, we also produce cobalt, were really critical components of a certain type of battery, the battery that goes in cars primarily. And so that it was a way to play that. And, there are a lot of different ways that someone could have played that through this time period, but that's kind of what we thought was most interesting.
It makes sense to me. I mean, smartphones need batteries, cars need batteries, a lot of things need batteries. People don't even realize where the nickel and cobalt is going, but all the stuff that's being thrown out and then is being recycled by companies like yours to, because we can't keep mining these materials, right? They're talking about going to space to get an asteroid or going on the moon to mine. What do you think about space mining to try to get the stuff we need? I mean, we're still going to have to do it on Earth, but I mean, apparently the resources are kind of running thin, apparently.
Well,
right?
Well, here's what I would say. It's not that it's running thin, it's the grades are declining. So, maybe 100 years ago, you were chasing an ore body that was 10, 12, 14% of copper, whatever and
Yeah.
today, maybe you're chasing 1% copper.
Ooh.
So what's happening is it means you have to move more dirt is kind of the way you have to think about it. So that means you have to move X times more dirt. So it becomes much more expensive. So it's a little bit we're not necessarily running out. It's that we're chasing much lower grades, which means it's much more expensive to mine and come up with these materials. What does that mean? It means that all these things, notwithstanding a market sell-off, as we speak today, but if we talk about this world in 5 and 10 year increments, this stuff will all just cost quite a bit more. And one of the interesting things to point out is from discovery of the first hole in the ground until a mine is built, it's a minimum of 14 years. And by the way,
Wow.
it
That's
could
a
be
long
20
time,
years,
man.
right? Like
That's a
that cycle
long
is so
time.
long. Because you drill the hole, and you drill a second hole and a fifth hole and a
Jesus.
10 hole. And by the way, once you finally know something's there, you have this massive permitting process. And so
Oh,
um,
that
we
sounds like a
have
nightmare, man.
it is a nightmare. Look, what did Mark Twain said something like there's a lot of funny kind of uh, anecdotes around mining, but it is a tough business, and it's also the business that really fuels everything in the room you're in. Think about it. Look around your room right now. Everything there is either
Even this
mined or
microphone.
grown, right? On some basic
This
level.
microphone has some sort of metal in it. So, do you think it's smart for people to invest in metals like gold and silver and nickel and cobalt and copper and whatnot? I mean, is that something they should be
You
doing?
know, well, it just depends. So first of all, I think it depends on how much money you have, but the majority of in my view, the majority of disposable investable income should really go into like some really safe strategy.
Okay, well,
the,
give me the top 3 points to that strategy.
well, look, the strategy for me is uh, index funds capture the market moves, and through time, that S&P 500 strategy, I think, is the best strategy for your average person to implement. Low
For a
cost,
for a 30-year.
100% dollar cost averaging, which means you're buying on the way down, on the way up. Like that is the winning strategy. Now, at some moment, if you have enough disposable income, and it's not going to change the way you live your life, because you shouldn't be doing this as like the lottery ticket to pay for your new house or something, because
Right.
that's just gambling. But if you're doing this, you have some disposable income, you want to take risks. And I suggest investing in things that you know. And, you know, maybe that every single one of your friends is buying a Tesla. Maybe that's something you know. Maybe you know that all your kids are buying Lululemon or watch Disney or what. I think that people are very successful when they are investing in things that they know.
So catching
Now,
trend. It sounds like you're talking about catching trends. So like we're in the middle of a pandemic, right? And 2020 hit, and we didn't know. I mean, at least I didn't realize I should be buying Zoom stock and Disney for Disney Plus, and this stock and that stock because these companies all of a sudden just took off because of the pandemic. Like, how do you catch those trends? Because you're saying
well, that's you're talking about being a professional investor then, because like I said, most of the money should be in these index funds. But
so like S&P 500, but like let's say every month you're earning some. Say you're a landlord, you have some rental income, you have an extra $1,000 a month. You're saying that extra money is not going to kill you because you're not spending it on anything. You would do something else with it.
Well, then it comes down to you as an individual. So if you were sitting on your third Zoom call and you said, wow, this Zoom thing's really going to happen. Maybe I should go look at buying some stock in this. I mean, that's kind of the idea is, and I think that's where the best investment ideas come from for
do your own research.
Well, it should be some epiphany around the things that you use and a realization that if we take Zoom as an example, by the way, I didn't buy the Zoom stock either. Like I didn't really fully appreciate, but what I did do is I bought the S&P, pretty close to the bottom because I just thought, hey, look, these companies,
are going to take off.
Away. Yeah. And like the horizon has to be multiple years on that because, as we speak right now, I think the S&P is down again today and it might be down again tomorrow. So,
but in 10 years,
in 10 years, exactly. So that is something very different. And for me, like when I thought about Tesla and this transition, in my mind, because remember, this is 7 years ago, I didn't really know, okay, is it going to be one of these Chinese companies? Is it going to be a Ford or a Tesla? Who's going to win that race? Like I didn't really have a view. And so I started looking at the components. I bought some chip makers at the time thinking, an electric vehicle is comprised of
computer chips. Yeah.
Yeah. And that was,
and now there's a supply chain issue with the chips, right? There's a shortage. So did that make the prices of the stocks go up?
Oh, they went up dramatically. So I personally bought chip makers at the time and basic materials because I'm like, no matter what, no matter who the winner is of this race, every single one of these automobiles is going to have nickel and cobalt and copper in it, right?
That was
smart. My way of thinking about it. And I think that's really a good framework for people to think about investing in general is, when you kind of come into something that impacts your daily life and that's part of what you do, you think, okay, this is going to be big. And I mean, those are the ideas that work for individuals. They're risky, of course, but you know something about it. And I think that's a much smarter way than going and chasing Dogecoin when you don't know
Right.
anything about it. Now, if you sit there and you study it and you think you have an edge, that's different. But if
Oh,
you
well,
hear your mom,
let's just be clear. There was no studying Dogecoin. It was never meant to be worth anything. I happened to be in crypto since 2013. I mined Dogecoin back then, and it was always meant to be a meme. It was never meant to be any value. Elon made it take off, and that's what happened with it. So if you got lucky to, like you said, buy the bottom and sell at the top, then you became a millionaire. If you bought at the bottom and didn't sell at the top, or bought at the top and didn't sell and lost your money, yeah, that's a tough one. It sounds
well,
like we
I
should.
actually think I think you just said something that's really important that I think a whole generation of investors is going to learn. You never lost money selling at a gain. And
Right.
sometimes you buy a stock for a dollar, it's at $10 on its way to 50. Well, guess what? Be happy when you sold it at 10.
Profit's profit.
Yeah, there's liquidity on its way up. There's always liquidity. How many people are sitting out there now on these coins that they all went to,
Zero.
whatever they
Yeah.
went to, and
Horrible.
now they're all the way. They did this round trip, and so I think it's important too, especially not inside of like your S&P portfolio, but inside of the speculative portfolio. Let's talk about. I think it's important to remember if what you have is up, sell it. Like what? Why are you emotionally attached? Because if you sit there and wait,
It's FOMO. It's all the FOMO, man. It's like, well, I saw, Ethereum go from $80 to 4,000. I didn't sell it because people are saying on Twitter it's going to go to 10,000, but they probably don't realize that means, yes, it might go to 10,000 in the next cycle, like 2025 or whatnot,
exactly,
when it goes to POS, proof of stake. But the fact of the matter is, these people are also listening to influencers on YouTube, right? And these people are just pushing, garbage strategies, which you shouldn't be. Again, do your own research. And we should probably both mention nothing in this episode is financial advice.
Yeah, of course not. That's exactly my point about the speculative investing is you should really be investing in these things which touch your life that you think are interesting, are going to be important in some way or another. And that's really where I've had the most success is like kind of these epiphanies around, like I didn't have the Zoom epiphany, unfortunately.
But you had the metal one, and I think we should have had our episode back then, so I could have jumped into that.
Yeah, and by the way, it's not a great time to be buying today because I'll tell you, the commodity markets are selling off in a big way just because of hiking rates and
Yeah.
The Chinese lockdown. So look, things are looking a little bit rough here for the next probably 6 to 18 months.
So what can people do to solidify their financial future for the next 6 to 18 months and going forward from there?
So if it were me, I personally would not be putting on speculative bets. Even if I like companies, I might be making a list of companies I like because it's much easier. And this is just more of a general strategy. After the thing has started to move up 5, 6, 7, 10% to just buy into that and give up 10% because I think there's still a lot more downside in the market. Especially if it trades sideways now for a couple of years. So I think one strategy is just stay in cash. Yeah, you're losing kind of 7 to 8.5% to inflation, but that's better than losing 30% to the market. So staying in cash is one option. If you have a longer view and you genuinely know you have a longer view, I think, dollar cost averaging into something like the S&P still makes sense. An index of tech stocks could still make sense, but I think you have to really be certain that you don't need that money for 5, 10 years. But in terms of like speculative plays, I'm not sure that you need to buy any at this time. I think there's still a lot of downside risk.
You talked about crypto a little bit, and the elephant in the room is Bitcoin, right? And a lot of people were calling it to go to 100 to 150,000 last year. It didn't quite make it, hit half of that, but they're saying, okay, now it's next cycle, which the halving 2024. They're saying 2025, it'll hit those numbers. What are your thoughts on long-term strategy? Like, say somebody bought Bitcoin at 60,000 last year by accident, or they thought it was going to keep going. And now it's down to 20. They lost a big chunk, but they're thinking, oh, but I'm going to hold it till the next cycle. What are your thoughts?
So specifically, I've like, as I said, I've not traded crypto. I've not made money or lost money in crypto, but just more, if you just talk about, it depends on that individual's duration. Like if they have the view, let's just talk more generically, because like I said, I'm not a Bitcoin.
Right.
But if you bought something at 60 and it's sitting at 20 today, you don't need that money and you don't have a better investment opportunity because remember, you can still sell it and do something else with it and make it back up potentially. But if you really felt that in 2025, it's going to 150, that was your number, I think. yeah, you can hold that, right? I mean, that's a sensible strategy if you don't have an alternative for that capital where you can make back that gain and more. And so that's what you have to weigh it against.
And that works for any stock, right? I mean,
It's just a general strategy. And I would say, like, even as just more as a speculator, having never owned Bitcoin, like I was thinking, man, if this thing goes to 5,000, I'm going to buy some. Like I don't know the number,
yeah,
right?
because it could go to 500,000 in a couple of years, and you'll be kicking yourself.
Well, I don't think it's going to zero. I mean, I think that the mass adoption of crypto is happening. I kind of liken it, and maybe incorrectly. I'm just really, really a someone sitting on the sidelines with this, but I see this as like the tech bubble, right? When Pet.com, all these things blew up, and by the way, what emerges? Amazon.com emerges, and Apple, and then how many other tech companies? I'm confident that inside of this ecosystem of currencies and companies and ideas, there's going to be huge, massive winners.
Of course.
And most of the other ones will probably be losers, right? Like,
of course.
So, and I don't really have any insight into which ones those are going to be, but I really liken it onto that kind of initial tech boom 20 years ago or whatever it was.
Awesome. I feel the same way. Awesome, Anthony. Thank you so much, man. Where can people find out more about your company and what you do?
I think Twitter's the best place. Just find me on Twitter. I tweet a lot about markets and always happy to interact with people there.
Cool. What's your handle?
A_Milewski.
Cool. I'll tag you in the description. And as always, hope everyone enjoyed the episode, and we'll see you in the next one.